Welcome, everybody, to the Broker Life podcast. This channel is dedicated to give you greater insights into the real estate and mortgage industry in Canada by diving deep into the minds of the professionals who live and work it every day. Today's guest is Corbin, Raison, Business Development Manager at MCAP. Welcome, Corbin.
My pleasure. Thanks for having me today.
No problem. So, Corbin, why don't you just tell me a little bit about yourself and how you sort of ended up at MCAP?
Sure. Yeah, I'm going to date myself right off the hop. I've been in the industry for, well, I guess 23 years now. I started off with Wells Fargo Financial. I spent 10 years with Wells Fargo Financial, doing really every role there was, but eventually was a branch manager at the retail branches. And when Wells Fargo left Canada, I went looking for work. And that's what got me into the broker channel. And you know what? Wow, what a run it's been. So I went in. I was with Home Trust in 2010. I actually accepted a position as a senior underwriter with Home Trust on the alt side, and I spent a couple of years doing that. And ever since then, I took a business development manager role with Home Trust in about 2012. And made my way to MCAP in 2016. And I've been a business development manager for MCAP since. And that's what's got me here today.
Lots of experience.
Lots of experience. And you know what? I actually forgot to mention, I did spend a year with BMO doing commercial lending, but I realized I went back to residential. It was just more of my passion.
Yeah. So what do you like about your job? What do you like about being a BDM at MCAP?
Oh man, first and foremost, the people. I'm a people person. I love being able to come up with solutions for potential mortgage clients. The mortgage industry, and especially the broker channel, is such a small knit community, and I just love being able to work with mortgage brokers to come up with everyday solutions for homeowners.
Amen. So I want to ask you who MCAP is, because our listeners may not know who MCAP is. And frankly, before I became a broker, I had no idea who MCAP was either. What's interesting for me is that I worked at CIBC for 10 years. 8 of those years was a mortgage specialist. And towards the end of that 8-year cycle, I felt pretty confident I knew everything about mortgages. And then I got licensed, and I honestly felt like I knew nothing about mortgages until I jumped on board. And MCAP was one of the first lenders that I learned about. So who's MCAP?
Well, MCAP is Canada's largest mortgage finance company. So in the whole realm of things, we would be the 6th largest mortgage lender in Canada. We have over 1,500 employees, growing dramatically. When I started with MCAP in 2016, we had less than 700 employees. But we also carry over 150 billion in assets under management. Currently, 400,000 Canadians hold their mortgage with MCAP, and we're aiming to be the #1 lender in the broker channel.
Well, I think you're doing well if you're number 6 in Canada. That's pretty crazy.
Yeah, it's come a long way. It's 35 years in business, I should mention as well.
So when people hear all of that great information and they hear that MCAP is this big mortgage company, we define MCAP as a monoline lender, a mortgage-only company. For people listening, it's not a Schedule I bank, so it's a different type of lender. How does MCAP survive? Like, who invests in MCAP? Who are the investors?
Well, without letting the cat out of the bag too much, I can tell you we have over 30 institutional investors. All of the big names you see out there are going to be an investor in MCAP. We have such a deep pool of investors, and you know what? One really cool thing, actually, speaking about investors, is when you see a policy with MCAP get changed, it is relative with all of the investors. So we don't have little pockets of, well, this investor will do this, this investor will do this. So we don't have to slice and dice it for you. It is broad for all of our investors. That's why it can be a little slow to get policies changed with MCAP, but when we do, it covers all of them so that there's consistency for the brokers.
That's interesting. So in effect, we can say some of the big banks are most likely investors in MCAP. So it's a really strong backing if people are concerned about the brand or the name. You could say you're a big company, but when you get that sort of big brand name behind you, I mean, it doesn't get much more secure than that, I think, in my mind. That's what made me really put MCAP on the map for me. I felt like there was like 30 lenders I had to learn about. Why is MCAP different than all the other ones? So that's good to know. So how do you help mortgage brokers? How do you help me in your daily job?
Well, personally, I like to pride myself in training and knowledge. I always want to ensure that the brokers are getting um, the full realm with MCAP, and there's always going to be a little policy or guideline that differs from lender to lender, and we have some really unique niche policies out there. So I always want to make sure that the brokers have this top of mind. Say, oh man, hey, you know what? I remember Corbin talking about that recently. I know I can send that. That's going to be a fit with MCAP. Because I mean, at the end of the day, we can talk rates all day long, but a rate doesn't define you as a lender. Someone will come to you for a rate today, but leave you for a rate tomorrow. But what makes you different? And that's what I really pride myself in on. And I want a broker to feel confident when they're sending a deal in, saying, "Hey, you know what? I chatted with Corbin about this. We want to make sure that it's going to be a good fit." And that's what I'm here for. I'm not the type of person just to say, send a deal in, let's see if it sticks. No, I just want to make sure that you're confident in your conversations with me.
That's a good segue. So what is one of the big differences between an MCAP versus a major bank?
Well, mortgages is all we do. When you look at a bank, you said you came from CIBC. Yeah, sure, mortgages are a portion of what the banks will do, but this is all we do. And so we are experts in our field, and we even have prime and non-prime options on the Eclipse side to really try and help majority of customers out there to fit their needs.
Are there any risks with going with a company like MCAP? There's always risks
I,
with any lender, but any particular thing?
Yeah, I would say no. We're integrated in the Canadian market, Canadian mortgage market so much. Again, this is all we do. We use all three mortgage insurers like the big banks would do, and we have solutions for most every scenario due to the large investor background that we have.
It's so accurate. Now, what is unique about MCAP? Because I think I probably work with, well, I have knowledge of at least 40 lenders, I'd say, and it's probably north of 40 when you include all the different privates and stuff. So what would you say is unique about MCAP? What's your competitive advantage?
Well, first and foremost, it's going to be our culture. MCAP has such a great culture that we really want to be there to get the deals done when we can. I mean, and a couple of other things too. And you've had the chance to use the market is Professor, the broker portal, and then the MyMCAP portal for clients for automation. And let me tell you a couple of things that would make us unique or stand out. And this is going back to when COVID first started. We were the first lender, including all of the banks, to automate payment deferrals for customers. So all they had to do was go onto their mymcap.com portal, and they were able to defer a payment at a time, up to 6 months payments. We approved 100% of those, and we didn't make anyone pay them back in a 6 month period or anything of that manner. It just added to it added to their balance at time of renewal. And I think that's really key, because when you have a lender that is looking out for you, not all lenders allowed deferrals, or you had to go through a questionnaire period, I would say, with a lot of them, and a lot were not set up on automation. So think about this: having to sit on hold for 6 to 8 hours with a lender trying to plead your case to defer a payment. We weren't about that. We wanted to make sure that we were able to meet all of our customers' needs in a time of need. Not only that, that's when our cashback mortgage was introduced. we thought, man, what can we really do to help customers that are nervous and worried right now? A lot of people wanted to have 5 or 10 or $20,000 sitting in a bank account for the what ifs. You never know. And so we introduced a cashback mortgage for them to take advantage of. And I'm going to add a third thing to that during COVID. We introduced a one and done income policy, which meant we were verifying income right up front on the application. And we were not doing it at time of funding, because we all know during that time, there may have been some temporary layoffs or whatever it may have been. And we wanted to make sure that a customer felt confident dealing with MCAP.
That's loaded. That's a loaded ton of value right there. And that hits home with me personally too, because I was one of those people calling my big six mortgage company to defer my payments during COVID. And I had to wait weeks and hours on the phone to get a hold of them, and had to talk through their questionnaire. Now, they did end up going ahead with it, but that was a pretty stressful situation for us. My wife got laid off, and so that was a pretty tough time. So knowing that a non-bank lender allowed you to do that with the click of a few buttons without any questions is pretty amazing. And so I really want people to hear this and understand this, because, going back to the sort of opening comments about MCAP, there are other options out there, and it doesn't have to be with the big six banks. And as a broker, we offer mortgage solutions with big six banks and monolines like MCAP, but features and value like this, I think, are really important when you're trying to make your decision. So I love all that, Corbin. That's really great. I want to sort of talk about your products just for a little bit. You don't have to go into a big product dump here, but what would you say is, just off the top of your head, maybe some of the most popular products that MCAP is offering, or you're seeing clients opt for right now?
Sure. I mean, we have a wide variety of products. We have our adjustable rate mortgages, our fixed mortgages. We have 5-year terms, but we also have shorter terms. We have longer terms too. We have a 10-year fixed option as well. We have HELOC products, a combined mortgage and HELOC product that is readvanceable. We have second mortgages, but by far right now, if you're asking what I am seeing in the marketplace, it is the 3 and 4 year fixed mortgages that we are seeing a majority of right now. We have some great rates, great comp on them. But at the end of the day, I think what we're seeing in the marketplace is people aren't really sure where rates are going to be in 5 years. Do they want to lock in on a 5-year fixed? And I'm not saying not to, but I'm just saying there's more people that are really focusing on a shorter term fixed rate mortgage right now. I mean, we look at prime rate, man, it's through the roof right now. And the adjustable rate mortgages are 80% of the time, they're a great option. We're in the 20% right now, where they're a little higher than the fixed rates. So more and more people are gravitating towards a 3 and 4 year fixed, and then they'll reevaluate at that point in time.
And obviously that has to do with, what our economy's been going through the last couple of years, and all-time inflation. Well, not all-time inflation highs, but I think it's like 40-year highs. So obviously, as inflation comes down, I think that story could change. But as a broker, I'm seeing the same thing. I'm even recommending shorter terms too. And I think people have to understand this is the perfect example where rate doesn't matter, because typically a 5-year fixed is the best interest rate, the lowest interest rate available. But not today. The 1, the 2 especially are pretty high. The 3 and the 4, there's definitely a little more value in there. So it's kind of that conversation of, do I want to maybe pay a little bit of a higher rate for a shorter term in the hopes that maybe interest rates will be lower in the future, or just pick the lowest rate, which happens to be the 5-year in most cases, and then ride that thing for 5 years, knowing that there's probably a really good chance that rates will be lower in, even as soon as a year, right? I mean, we're already starting to see inflation's down to 4% from its high of 8%. So what's us to believe that it won't be lower in 1, 2, or 3 years? So that's a really interesting conversation where, when people start asking what's your best rate, well, that's not really the right question right now. Maybe in a stable environment, but maybe not right now.
Agreed.
So I want to talk to you about your second mortgage program, because you're one of the few lenders that offers a second mortgage. I think it's called the Safeguard mortgage. Can you just talk a little bit about that, how that works?
Sure, absolutely. So yeah, we have a second mortgage program, and for those that don't know, MCAP also owns RMG as well. So we have a second mortgage program that clients can take advantage of if they have a first mortgage with MCAP or RMG, and we can put the second mortgage in place. Now, why would we do that rather than maybe a refinance? Well, this goes back to what I mentioned at the beginning of COVID. When interest rates started to dramatically increase, we took a step back and said, how can we help our customers? Well, the reason we introduced this safeguard second mortgage is to protect them and their first mortgage rates that they have in place. We had to think a couple of years ago, people were getting first mortgages at 1.5%. And yeah, you may need the money, but no, you don't want to pay out that first mortgage for that rate. So we introduced the safeguard second mortgage, and this way it keeps that first mortgage in place, that great rate in place, and you have no prepayment penalty on it because we're putting the second charge in. It can go up to 80% loan to value. And then the rates on the safeguard second mortgage are almost as good as our first mortgage, and we can go up to 30-year amortization. So it is really a win-win-win-win for everyone on this. Take advantage of the equity on the increasing equity, but keep their first mortgage rate in place. And we also allow adjustable rate or fixed rates on that second mortgage product, which makes it real nice.
It's such a good product because so many times, especially in the market where I live in now, I'm from Edmonton, but I've relocated to Victoria, as people may know. This market, there's a saying that I learned here that probably goes across BC, but I think definitely in the bigger markets like Lower Mainland and Victoria, is that your house price doubles every 10 years. So if you start with an MCAP mortgage, even if you're a first-time home buyer, and then you double your house price, your equity essentially doubles in 10 years' time, and maybe you're looking at doing home renovations, but you're midterm, yeah, a second mortgage makes a lot of sense to be able to take that equity out to do whatever, renovate your home or buy another property maybe. So I feel like that is really important with people that are midterm and in markets that are growing like the big markets in Canada. So I love this product. Okay, I want to talk about penalties. This is another differentiator between banks and monoline lenders. So in general, if you have a closed mortgage, usually a closed fixed mortgage, and you want to get out of that mortgage, there's a penalty. And the penalty usually is the greater of 3 months interest, or what we call IRD, or interest rate differential. Both banks and monoline lenders use the same formula, but it's a little bit different. How is it different?
Well, it's different because we go discount to discount rates rather than the posted rate that the banks use. So this can be a dramatic difference. Well, and I'm talking IRD here for everyone. Our 3 months interest penalty on the adjustable rate mortgages is very similar. But when we're talking fixed rate IRD calculations, this is where such a difference can be made, because when we're taking our discount rates, when we're looking at that, calculating the penalty against that rather than the 5-year posted rate out there, I have seen differences of over $20,000 on penalties. No joke. And this is something that doesn't get talked about enough. And if you don't mind, I want to tell you a real quick story here.
I'd love to hear it.
I was recently in my bank. I'm not going to mention which bank, but I was in there for other purposes on investments, and they asked me. They said, "Can we have a shot at bringing your mortgage over?" And I said, "Well," I said, "Tell me about the mortgages you're offering." And I wanted to hear what they were talking about, especially on the fixed rates. And I then asked, I said, "Okay, tell me about your IRD penalties." This was a 15-year bank employee. Again, I'm going to repeat that, 15-year bank employee. And they said to me, "Well, what is an IRD?" So I said, interest rate differential. I said, "Tell me about the penalties, how you calculate it." Sadly, she said, "I don't know what that is." That is shocking. It's shocking and scary when you hear something like that, because now you know they're not explaining this to the end user. Sure, sure. One of the big players out there may give a little bit of a discount at the beginning, but they're sure enough going to get you on the back end when you're leaving. And that to me really just sat true. And I thought, wow, we have so much power that we maybe don't even realize on the broker channel side, where we can explain this to customers. And everyone I would ask that question to, and the broker I asked that to, they would be able to explain it. But when they didn't even know, this 15-year bank employee didn't even know what an IRD penalty was, that just became very real to me on what some customers are faced with when they're having to pay out a fixed rate with a bank.
That's incredible. And it's actually not shocking to me because I did work for a big bank for 10 years. And I remember like I was a financial service representative, which is basically like a personal banker, I guess, right? So I would do mortgages, open bank accounts, open credit cards, lines of credit, loans, insurance. I would do it all. So, I was the person that people were seeing on an average day. They'd go to the teller, say, I need this, and then they'd come see me, and then I would help them. I had 2 days of training before I had my first client. And the training was really like, read this book, read this manual. And then once you're done reading it, then you can go and start helping people. And I said, I don't know anything about anything. I don't know anything on mortgages. And in fact, I actually purposely didn't sell mortgages for like the first like 3 or 4 years because I was terrified of mortgages. I said, give me the bank accounts. I'll open those. Now, this was a long time ago and I was a lot younger and certainly was a little bit naive. But I think that just has always stuck with me because it starts with the model. Now, I do know banks have changed and they have now implemented better training policies and stuff. But this is only 15 years ago when I first started into the banking sector, and I didn't know anything. So if someone came to me and said, "What's IRD?" That would have been me. You're talking to that person saying, "I have no idea," because I didn't learn it. Nobody taught me what IRD is. And then it wasn't until we had a trainer at the big bank who was training on mortgages when he came in and said, "Okay, like, what's your comfort level?" And I just told him straight up, like, I don't know what I'm doing. Like, I'm not selling mortgages. And we had to spend a lot of time learning mortgages. And this is halfway into my banking career. And then finally I understood it. And then I started to get more comfortable with it. And then he was actually the sales manager of the mortgage specialist team when I became mortgage specialist. So he basically poached me and said, "Okay, well, now that you figured it out, let's just focus on this." So then obviously, the rest is history. But it's such a good point, Corbin, because not only just with mortgages, but I think I was looking at a stat the other day. It was something like mortgage brokers hold something like, I want to say like maybe 30 or 40% of the mortgage market, but it's still heavily dominated by the banks, right? People in general will go to the banks first before they have the opportunity to see a broker. But really, it should be the other way around, because not only the knowledge is less, but there's just less products. If you just go to your bank, there's just one option. And if you can't help them, they're out of the door. Whereas you come to a broker, we can explain all these differences and we're licensed and regulated. So it's just a completely different way of doing it. So I'm rambling on a little bit, but I love your story because I hope people open their eyes to the idea of working with a mortgage broker, and not even myself personally, but just go find somebody that has options and they can explain the intricacies of the mortgage space, because it's very complicated, right?
Well, it is, and I always like to tell stories for people to remember. That's how I remember things. And I remember this was about 8 years ago now, and a good friend of mine, again, works at a major bank, and he had asked me, he goes, "Can I have a chance at your mortgage?" He knew I was moving, and I said, "Okay, you can," but I was moving from a house where I needed to do a rental offset on it. And I asked him the question rather than a 50% add back. And I said, "Okay, you can have a chance my mortgage, but let me ask you this first and foremost." I said, do you guys use a rental offset calculator?" And he's like, "Yeah, bro, I got you." And I should have known at the "yeah, bro, I got you," that maybe he didn't quite know. 4 days goes by, and I haven't heard anything from him. So I give him a call and I said, hey, where's my mortgage app sitting at? I haven't heard anything from you. And he's like, oh, bro, your ratios don't work. I said, well, no, I know they don't work on the 50% add back. Is that what you're having to use? He's like, yeah, that's what the underwriter tells me. Now, moral of the story, I got the deal done in 2 hours with a broker. No big deal. I went through one of the broker friendly lenders, and I think that's the point of all of this. But if I had have been, let's say, my brother's a machinist by trade. He deals with his bank. Yeah, a lot of people do. As you mentioned, you have one product. So he walks into the bank and says, hey, can I get a mortgage? And if he didn't realize that there's other lenders out there that use a different calculation on rentals, he would have left discouraged and never would have bought another property, most likely. I knew better because I'm in the industry. But again, just remember, all brokers, just remember the ability you have. And not only with MCAP, but other lenders as well, where you can do things that someone might not be able to get done at branch level.
Amen. I mean, that's incredible. And it's just hilarious sometimes to think that most people are still going into the branch. And I really don't want to crap on the banks here because I sell a lot of mortgages with banks, and there's a place for them, but it's really the power of the broker, as you mentioned. And I'm only in the game 5 years, and so there's still things that I need to learn. But already in my 5 years versus my 10 years, I feel like I know I'm at the big boy table, and I understand all like the different ways to do mortgages and how different lenders operate and stuff. So I love those stories. I love you sharing those examples. I think that's what people need to understand. I want to switch gears a little bit and talk about technology. So we're in this, we're in this time, this era of exponential growth in technology. Now we're talking about AI, and things just keep evolving and evolving. What's MCAP doing? How does MCAP use technology? What are they doing to kind of stay current and relevant in that space?
Great question. And you know what? I think MCAP's been a leader in technology for many years now. We try and always make it a smooth process for not only brokers, but the end consumer, because we want them to have a great experience so that they can come back. But let's start first and foremost with brokers and the broker portal that we have, Professor. Now we've had this for many years, and I want to go back to my time as an underwriter, I would say, where what is the difference? Well, here's a big difference with MCAP. You upload your documents onto the Professor portal, and they're time stamped. As little as that seems, that is a huge thing. Now it puts the accountability on the MCAP underwriter, because everyone can see the documents in there. We know when they came in, and we have SLAs that we have to provide for the brokers. Now, back at my time as an underwriter, and I was an underwriter for quite a few years, where the documents would be emailed to you. And what if I was away? What if I was on vacation? If you as the broker, you're like, well, I mean, I might or might not have an out of office response on, or maybe Joe Smith that's looking after everything for me, they don't have all of the documents. So sure, you see my out of office and you forward it to them, but they don't have an understanding of the deal. Well, all the notes are in Professor. Everything is right in Professor. So we automatically put that over to another underwriter so that they start receiving all the documents. If your dedicated underwriter is really not in, they're on vacation or sick or whatever it might be. And as insignificant as that can sound, that one piece takes the stress away from brokers. We don't miss a beat. We're still there. We're meeting our SLAs. We're getting the commitments, the condition updates, all of that good stuff. But then on top of that, on the back end, when we fund the mortgage and the customer can log on to their mymcap.com portal, and they have everything at their fingertips and available, and it's a nice looking screen, and they can change their payments, or they can do payment increases or lump sums and all of that, or they can even switch their adjustable rate to a fixed rate right on their portal. I mean, how cool is that? That we're just utilizing technology to the advantage of everyone and to make a smooth process for everyone.
I love Professor. And Professor, it was one of the first reasons why I decided to send deals in to MCAP. MCAP's already one of the most competitive lenders with interest rates. And then they're already one of the most competitive lenders in terms of size, employees, product offerings. And then you throw in a platform like Professor, which is really just a web-based portal that brokers can upload documents and communicate with underwriters and see notes and see the status of the file. You're right, it doesn't seem like that is that big of a deal, timestamps, but compared to the alternative, it's miles and miles ahead. And when we start talking about service, this is making brokers' lives easier, but through brokers, it actually makes the client's lives easier, because if I know what's going on at any given time on the deal, I can relay that information to the clients and they understand where the file is. If I'm just emailing docs in and pestering underwriters with emails and they're not getting back to me, I am in the dark. I have no idea where the deal is. And so you have to basically just, entrust the clients that you're going to be okay and the file's okay because you've done this a million times. And even though you may not know where the deal is, because we understand, I guess, the basics of the file, you can kind of make a story like, this is how the process works with this lender. We have to just wait. And that's uncomfortable to hear. Nobody wants to hear, I just have to wait, right? So I'm so glad you pointed that one out. It's literally maybe the best thing about MCAP. I don't want to say it's the best thing, but it's definitely way up there, top 3 things for sure.
Well, and I love it too. I mean, that's one of the things that really does set us apart. And heck, we even have all of the guidelines on there. So, and that's what I'm here for too. But sometimes I'm doing things like this where a broker can't get a hold of me right away, but they could pop on Professor and check, oh yeah, you know what? Here's what they'll accept for down payment.
Exactly. What's one tip you'd give Canadians looking to enter the housing market this year?
You know what? I don't know if that would change from this year to any other year. I think it's more prevalent this year with the interest rate increases that we've seen, but just have patience. Your dream home will come. Your dream home doesn't need to be your first home. Being overextended, I just, try not to overextend yourself, because the stress of being overextended in your first house can just really ruin that experience, I would say. I look back at it, and sure, I wanted the biggest, best place I could when I bought my first home, but I also realized that, in steps, gradually things come. So I would just say, have patience and really just get into the market rather than trying to achieve something that may not be achievable.
Baby steps, right?
Yeah.
Yeah. What's the biggest challenge you're seeing in the market? So obviously costs are high, but is it as easy as just saying the rates, inflation is high, that's the biggest challenge, or are there other challenges you're seeing?
Well, there's definitely other challenges regionally. Let's look at our lack of inventory in Alberta. And I speak for Calgary because that's the market that I really look at. But when we combine high interest rates with lack of inventory, sales are down 50% year over year in Calgary, I would say. And mainly due to a couple of reasons, but the fact there's no inventory. So it makes it really tough. And then every lender starts fighting for a smaller piece of the pie. So then we have to, what's going to differentiate us from other lenders out there?
I have some interesting stats I'll throw back at you here. So inflation's down to 4.3% from 5.3% after the last reading, and I think it was 8, maybe even 8.3% at its peak. Bond yields are down from 3.8% high in October to 3.2% today. They're still up about 1.6 pre-COVID, and the Bank of Canada has paused the last 2 rate hikes. So as inflation subsides and continues to lower,
Where can we expect interest rates to go by year end and next year? What's your prediction? I know the banks have their predictions out there. What's your thoughts on that?
Yeah, that's the $1 million question, isn't it? I would suppose my best educated guess, well, we're going to see a slight reduction in overnight rates, probably early 2024, maybe late 2023. I mean, and for those that don't know, overnight rates will affect the prime rates. So we'll see the prime rate slightly reduced. I don't think it's going to be a quick reduction by any means. It's going to be slow and steady on those prime rate decreases. And fixed rates, my gosh, fixed rates. Well, I mean, where are they going to go? You just mentioned the bond yield reductions. Now, are we going to see continued bond yield reductions? A lot of the effect with bond yields has to do with some of the bank failures in the US with liquidity issues. We can never forget, I was in the industry in 2008, 2009, when we saw over 100 bank failures in the US. Will it happen again? I'm not going to say that, no. But never say never on anything. We may still see a bond yields continue to decrease, which will in turn typically lower fixed rates. I mean, that's the biggest driving factor of it. But we may see some more fixed rate reductions going on later in the year as well. But who knows? If I had the crystal ball, I wish I could be accurate, but that's my best guess.
And it's funny, when we do talk about rates, and I wanted to bring this up for going back to the rate conversation, is rate the most important thing? If rates are, I may be off here, but my guess is that pre-COVID fixed rates were around 3 to 3.5%. I think that's about where they were. And right now we're around, call it 4.5% for the lowest rates. So we're only really about 1%, maybe 1.5% higher than pre-COVID rates. And people were very comfortable buying mortgages at 3.5%. So realizing the cost is about 1% higher for interest rates, is that enough to keep people out of the market? I just don't think it is. And I think we're already starting to see people come back into the market. And I think you're going to see that this spring as well. Obviously not to the levels that we're used to, but I think it's that whole idea of like just getting used to the new normal, and this is where we're at, and this is the cost of doing business at the moment. So what about government? Government's a touchy subject these days, politically, financially. How do government decisions impact mortgage lending? And specifically, I think I want to focus on the low supply of homes, mass immigration, high spending, specifically through COVID, but just really in general. How do all these decisions impact the housing market?
Well, yeah, the governments can play heavily into mortgage lending and the housing market. The inflation is a funny thing. What would have caused inflation 40 years ago isn't what caused inflation this time around. I mean, 40% of inflation was really due to fuel prices. And to slow inflation, mortgage rates dramatically increased. Are we targeting the right area? Well, hey, you know what? That's not really up for me to decide. But I look, and again, my territory in Alberta, I think we're going to continue to see heavy inventory issues due to net provincial migration that we're seeing, and immigration into Canada as well. I don't think this is going to be there's a lot of, I would say, short-term solutions. I think we're going to see some long-term effects on this, and how I know builders can't keep up right now when we look at these inventory issues. But going back to what you said, I don't think the 1% increase on rates is really going to slow people. I think it is coming around. People are hungry to buy, but we just need to be able to get there to keep up with the inventory.
Yeah, you're right. And I am with you. I think that if we're relying on the government to do something to get you into the market, I think you're gonna be waiting a long time.
Yes, 100% you are.
Yeah, because I mean, there's certain things that they've come up with that have helped, and there's certain things that like don't really move the needle. You think about like the first-time home buyer incentive, or the home buyers plan or just other programs they've come in, it just doesn't seem like it's really moving the needle. I'm not doing very many of those programs personally. Maybe other brokers are, but so again, goes back to the point. I don't think we should be waiting for government. I do think government plays a role with social housing and low income housing that I think they can make a dent there. But for the average consumer, and Canada is very middle class, I think if you want to get into a home, you just got to get in, as you mentioned earlier. And this is the cost of the interest rate at the moment, and you don't have to sign a 5-year fix as you alluded to. So maybe that 3 or 4 year makes a lot more sense. One more question around the economy here. So this is kind of a big, bold prediction. I'll put you on the spot here, but where do you see the mortgage industry in the future? 1 year, 5 years, 10 years? Where do you sort of see us evolving to as technology advances, governments get shaken up, immigration, all of it?
Well, we're definitely going to see a lot more automation coming in. Let's face it, we're seeing a lot of AI right now, and you know what? I know some of us even use it in our email scripts and so on right now. And I think if we use it to our advantage, it's going to be a positive thing. And going back, Mark, to 2016, and I still remember the day that everyone received an email about the changes with the government: insured, insurable, uninsurable, and people thought the world was going to come to an end. And you know what? At that point in time, was I happy about it? Probably not. But long-term thinking about it, I think that really helped. I'm not going to say save the broker channel, but it really helped the broker channel define themselves, whereas we became experts in the industry. And I think, as things progress, we're going to see some things like that. And as long as we stay up on it, we're going to continue to really thrive in the mortgage markets.
I couldn't agree more. Okay, time for speed round. You ready for this?
Okay, let's do it.
So I want to end the call just with some fun sort of this or that questions. You can elaborate, you can keep them quick, but I think this will just allow people to get to know you maybe a little bit on a personal level and just kind of have some fun here. So let's start with the first one here. And this is the same question I've been asking everybody to this point here. So house or condo?
House.
Pretty consistent answer. Fixed or variable?
Oh, unpopular opinion right now. I'm still going to stick with variable.
Yeah. Lift weights or run?
Well, I can't run. I've had multiple knee surgeries, which prevent me from that. So I'm going to say lift weights.
Sugar or salt?
Salt.
Beer or wine?
Beer.
So chips and beer. Morning or evening?
Morning.
BMW or a Mercedes?
Well, I have a BMW in my garage right now, so I'll say BMW.
And that's against the trend. Most people pick Mercedes, so that's interesting. But you're a car guy, so maybe
I'm a car guy. And you know what? You didn't add GM on there. I have 5 GM vehicles. If you can see in my background, I have an old Buick with that up there, and my father worked for GM for many years, so I'm just ingrained in it.
Maybe I'll add GM into that conversation. You a sports guy?
I am.
Who's your favorite sports team?
Well, oh boy. I mean, can I say the Flames right now?
You can say whatever you want. Yeah. The Flames. It's funny. I was in a bar the other night, celebrating the Oilers win, and this guy comes up to me, and I'm in Victoria, right? So there's not a lot of Oiler fans. It's not like I'm in Edmonton, Oiler Nation, but I'm in there, and I'm representing my team. And this guy comes up to me from Calgary, and I had an Oilers hat on, and he basically said, "Hey, man, like, this is tough for me to say, but my favorite player is on your team, and I hate the Oilers." And so that was a good little chat we had there for a couple of minutes, because obviously he's talking about Connor McDavid and how impactful he is as a player, even to the Oilers' arch rivalry, the Flames, and even Flames fans are coming up and saying, "Man, you guys got a good player." So that was good to see. But
he's an undeniable talent. I mean, you can't help but just be in awe with that guy.
Yeah, totally. We're lucky. We're blessed. If you could live anywhere in the world, where would it be?
You know, I absolutely love to call Calgary my home. Uh,
Wow.
I mean, I will say this. Sure, I would love to travel. I mean, who wouldn't like to be in Maui for 6 months of the year? But I love where I am.
But to live, the economy, the people, yeah,
Yeah, yeah.
proximity to the mountains, totally. I am jealous of that with Calgary, I'll tell you that, versus Edmonton. Um, what music are you listening to these days? Genre, bands, songs, whatever. What are you listening to?
Oh man, you know, I don't listen to a lot of new music. I'm still, gosh, I was born in the 70s, raised in the 80s and 90s, so I go back to a lot of older rock. That's what I love. That's what I grew up on.
Any favorite bands?
Oh man, GNR.
GNR, okay. I could just see you working on your cars, blasting some GNR.
Yeah, yeah, I,
Bandana.
I, I love them.
That's good. Throwback. What's your favorite movie?
Oh, I have two. As we mentioned, I'm a car guy, so Gone in 60 Seconds or Days of Thunder. I think
Oh,
Days of Thunder takes number one though.
yeah, those are good. Those are good ones. Last one. What's the last book you read?
Oh my gosh.
Or favorite book, whatever you want.
My, I have a lot of books that I've read that I need to read again. But I would I actually just read the unmarketing one with Scott Stratton, and you know what? He's a and going into this, MCAP has a partnership with Scott Stratton now for the next 6 months. So I just want to poke that segue in there.
What's the book called?
Well, it's one of his unmarketing books, and you know what? I can't remember the title. I have it sitting up on my nightstand right now. I'm gonna have to get back to you on that one though.
Okay, fair enough. Now, normally I like to end this with asking people where they can find you, but being that you basically represent brokers, where can people find you and or MCAP?
Well, I mean, you can find me on LinkedIn, Facebook, anything like that. But my phone number, I'll throw it out there, is 403-470-1261 or corbin.raison@mcap.com. Feel free to follow me on LinkedIn or whatever it may be.
And I'll sort of like help direct that. So if people are brokers or bankers looking to get into the business, maybe give you a call, not necessarily for clients.
Yeah, so broker facing, absolutely. Are the clients they're to reach out to our servicing department, but yeah, brokers or potential brokers just looking for some advice, feel free to reach out.
Awesome. Well, hey, thanks, Corbin. I appreciate you doing this today.
Hey, absolutely. Thanks for having me.